Hi there, we've got those jobs numbers for you. It is a miss. Fewer jobs were added to the Canadian economy during April than economists had expected. 15,300 jobs is the number. That's the number of jobs added to the Canadian economy during the month of April. There was a big contraction in full-time employment. 31,600 full-time jobs were lost during the month of April. 47,100 part-time jobs were added. So in other words, that net change in employment, a gain of 15.3 thousand jobs, was all part-time work, as there was a contraction of some 31,600 full-time jobs. The unemployment rate in Canada hits the expectation of 5.2%, and hourly wages rise 3.4% versus the same period last year. Let's bring in Josh Nye. He is senior economist at RBC Economics for his early reaction. Josh, you're hearing these numbers for the first time. Give us your initial reaction. I'll try to find some numbers that are beneath the headlines. What do you think of that? What looks like a miss, but of course we always remind viewers that these numbers are very difficult for people like you to pinpoint. And so given what we've seen historically, this is not such a big miss perhaps after all. 15,000 part-time jobs added to the Canadian economy.
Yeah, definitely softer than consensus. We were on the low side of consensus, so a bit more in line with what we were looking for today. I think this is an indication that we're reaching a fairly mature stage in the economic cycle. Certainly the demand for labor is still there. We had 800,000 job vacancies as of February. That's up from 500,000 pre-pandemic. So it's not demand that's an issue, it's labor supply. The jobless rate is at its lowest level since at least 1976. Labor force participation is quite high. So really, it's just going to be difficult to generate job gains on the scale that we've been used to in the past year or so. Going forward, I think we're going to be capped around, say, 20 to 25K in labor force growth, and generating much beyond that is going to be challenging. I think you're going to see more wage growth than you will job growth going forward.
I'm seeing in the table of industry gains or losses, I'm seeing some big losses in sectors which typically have been big gainers in months past. For instance, construction down 20.7%, retail and wholesale trade down almost 18%. These are sectors that have posted big double-digit increases in employments in months past, or certainly during February and March. What's going on there?
Yeah, so I mean, taking construction, for instance, we have seen a pretty solid rebound. That was a sector that was slower to get back to pre-pandemic levels of employment. Again, I think it's not so much of a demand issue. Construction had one of the highest job vacancy rates among industries as of February. Although you could, start to be seeing some softness in that industry, probably more so going forward as we see housing start to slow. I think that will sort of be the leading edge of the impact of rate hikes.
And those are not percentage figures, if I frame them that way. Those are aggregate job losses or gains. So construction losing 20,700 jobs, retail and wholesale trade losing 17.9 thousand jobs. When the dust settled across the economy, again, the addition of employment was 15,300 jobs. What about wage growth? You had some thoughts on that. Of course, as we came into these numbers, the wage growth in the period was 3.4%.
Yeah, I think that's unchanged from the previous month. Certainly, we think the direction of travel is going to be higher from here. As I said, labor market conditions are very tight. You're seeing that in the jobs numbers today. You're also seeing that in surveys of businesses, both small and large. And you're seeing businesses saying that they're going to be offering higher wages to try to attract and retain workers. So certainly we think wage growth is going to continue to accelerate over the second half of this year. The
accommodation and food sector added 4,200 jobs in the period. That, of course, is a sector that's affected in a positive way by the gradual lessening of restrictions.
Yeah, and that's one of the few sectors that is still well below pre-pandemic levels of employment. I mentioned construction has a high job vacancy rate. Accommodation and food has the highest job vacancy rate in Canada. So again, that demand is there. You've seen people move away from that industry, though, during the pandemic, switching jobs into other industries that were less impacted by the pandemic. So, as much as there's still room to get back to a pre-pandemic level of employment, I think that's going to be challenging for these businesses.
How about a crack at the U.S. jobs? We'll tell our viewers that the U.S. economy added 428,000 jobs during April, many more than the 380,000 jobs that were expected. The unemployment rate holds steady at 3.6%, and perhaps more meaningfully to the inflation debate, average hourly earnings rise 5.5% in the month of April versus the month of April in 2021. How does that feed into the Fed's view of inflation, Josh?
Yeah, the U.S. labor market, I mean, like Canada's, is very tight, and that's why you're seeing that type of wage growth. It's a bit of a different story in terms of job growth. I mean, that's a pretty healthy gain in the U.S. Payroll employment is actually still well below pre-pandemic levels. They have a real issue with labor force participation, which is also below pre-pandemic levels. So, there's perhaps a bit more scope for those types of strong job gains in the U.S. than there is here in Canada, but you're going to need to see that labor force participation picking up to see those types of gains. I think for the Fed, they're going to be keeping an eye on that jobless rate and that wage growth number as an indicator of domestic inflationary pressure. And this is probably going to keep them in that tightening mode that Chair Powell laid out on Wednesday.
That's Josh Nye on the U.S. jobs report and mainly on the Canadian jobs report, which has come in softer than expected.